Is ZETA Global an insanely undervalued company? It has a price to sales of 4, which is considered really cheap for the kind of growth this company is achieving. So is this a good buying opportunity? This is what I'm going to cover in this video. I will talk about the business model, financials, valuation, and risks. Before I move on, I just ask if you can take a second to smash that like button, subscribe to the channel, and let's continue growing together. I want to clarify, this is not financial advice. I'm not qualified to give financial advice. This is simply my opinion. Please do not buy the stock because of this video. Please do your own due diligence. Please do your own research. At the time of this recording, I do not own any shares in ZETA stock. Now, I will cover the business model first. ZETA Global is a cloud-based marketing technology company that leverages AI and data to help enterprises acquire, grow, and retain customers. ZETA is claiming that it can get a win-win situation by optimizing its customer company's marketing spend. Its revenue is primarily subscription-based, with a growing share from direct platform revenue, which is 74% of total revenue in Q4 of 2024. Now, ZETA does have competition. Key competitors include Salesforce, Marketing Cloud, Adobe, Experience Cloud, Oracle, Marketing Cloud, HubSpot, etc. Now, I will move on to the financials. ZETA is trading at $18 at the time of this recording with a market cap of $4 billion. Now for 2025, they're expecting $1.26 billion in revenue, which is about 25% growth. So this is amazing growth. Margins are not too great, but they are decent. Gross margin is 60%. Adjusted EBITDA is 20%. Now, ZETA has delivered 15 consecutive quarters of 20% plus revenue growth and 17 quarters of expanding EBITDA margins. So how much revenue can they make by 2030, which is 5 years out? In other words, can they continue to grow this fast? Remember, they are expected to grow their revenue by 25% for 2025. One factor that helps is the dollar-based net retention rate, which is 96% plus for this company. This tells us that their clients are almost neutral about their product, so this is good. Another aspect is ZETA is saying they aim to make over $2 billion in revenue by 2028 with 25% adjusted EBITDA margin. So overall, I am okay with 2.5 billion revenue by 2030, which is double of their current revenue. And I think this is possible. Now I will talk about their insane dilution. Their shares outstanding are 238 million, which is up 22% year over year. Stock-based compensation is $195 million in 2024, contributing to a GAAP net loss of 70 million. Management expects significant reduction in dilution in 2025-2026, with SBC declining as a percentage of revenue. ZETA has also initiated share repurchase programs, buying back $31 million in Q4 of 2024 and $41 million in 2025 overall. But this buyback is not significant to offset dilution. So what about the valuation? I am assuming 2.5 billion in revenue by 2030. Since their gross margins are not too great, but they are okay, I am estimating 17.5% net margin, and I think this is difficult to achieve. Current outstanding shares are about 240 million. ZETA is diluting shareholders like crazy, left, right, and center. I am estimating there will be another 80 million share dilution. Based on this, the 2030 stock price would be $41. Based on the current price of $18, this is a gain of 127%. Now, this tells me that the stock has good upside in the next 5 years, but not insanely undervalued like people are thinking. Now, of course, this estimation that I just mentioned is based on fundamentals, but unfortunately, not a lot of people focus on fundamentals. Now, let me talk about the risks. This space has intense competition. This advertising space has data privacy regulations that can affect ZETA. Remember what Apple's privacy initiative crushed Unity software growth segment. The same can happen to ZETA Global. ZETA has high stock-based compensation as well. Finally, we have to keep in mind that this space is cyclical in nature, where one quarter has good revenue and the other one may have bad revenue due to their clients' budget cuts. So as of right now, I am staying away from ZETA at $18. Let me know your thoughts in the comments, and thank you so much for watching.